Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
What's up, everybody? Anthony Crudele here, and thank you for tuning in for this episode with Dennis Parmelee and Paul Franco. Futures Radio Show is sponsored by E-Mini Group. They are the world's leading and most diverse futures and options exchange. E-Mini Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. Remember, new shows are posted on Mondays and Thursdays. You can subscribe to the show on iTunes, YouTube, Google Podcasts, Spotify, and Stitcher. If you're enjoying the show, please leave a review on iTunes. This show is also sponsored by Trading Technologies, FTSE Russell, and RJO Futures. To learn about some great offers that these sponsors have for our listeners, please visit futuresradioshow.com/sponsors. Today I spoke with two of my good friends and also futures traders, Dennis Parmelee and Paul Franco. The three of us are always sharing trade ideas with one another, so it was great to have the two of them on the show today. We kicked off today's convo by talking about how we've all been using the micros. We shared our process for trading these volatile markets, specifically in the E-Mini S&P. And 2 weeks ago, I had my worst drawdown of the year. So I talked about that, and then we discussed how we all deal with drawdowns. Last but not least, we each gave some technical thoughts on the E-Mini S&P. So without further ado, let me take you right to the interview with Dennis and Paul. Paulie E., welcome back to the show, guys.
Hey, it's great to be back.
Thank you, Anthony. Thanks for having me on, and hello to Paulie.
Hey, how you doing?
Fantastic.
You know that Paulie is my very first guest on Futures Radio Show. Did you guys know that?
I'm jealous. I'm jealous.
Folks.
Paulie, you and I were talking so much on Twitter back then that I remember when I launched the show that I was like, you know what? He and I are talking all the time about markets. I said, I think I'm going to have him as my first guest. So you are the first guest on the show. And look at this. That was almost 6 years ago.
Oh, my God. That's hard to believe. Man, time flies.
Time flies. So how are you guys doing?
Well, other than not having that head of hair that you have that everybody is envious about, doing great.
What about you, Paulie? How are things with you?
Things are going, really well, I have to say. I think that the environment that we're in right now, a lot of people reminisce, or not reminisce, but recount it back to it was like 2008 and 9. But the volatility has been great with these markets. In some markets you have to be really careful. I'll probably touch on that, like crude. I really don't even trade crude anymore. But one thing I like about the indices, especially the S&Ps, is I think it's helpful is that you get a lot of back and forth market, a lot of back and forth trading, which I think is obviously conducive to those of us who trade intraday. But maybe we could expound on that later.
Yeah, definitely. I think that, look, we're all on lockdown here. I think as traders, we are so fortunate to be able to stay at home and work. I mean, it's one of the really lucky things that happen with everything that's going on for us and the trader side of things. And we've had this volatility. And for me, I think it's as busy as I've been in a long time with trading and podcasting and everything that's going on.
You've got your hands full.
Yeah, absolutely, no doubt. But some of us designed our business that way too. A long time ago, made the decision that I wanted to have a business I could run from home and be, no matter where I am in the country. So that seeing the changes coming in technology and allowing us to work from home, if you saw it coming and you got into this business at the right time where you develop some skills and some knowledge, then it gets a bit easier, but it's never easy, in my opinion. Even the volatility now, it's changed even the way I look at the markets, and you don't use the same kind of leverage. You don't need to anymore because of the length of the moves, intraday moves of 100, 150 points. My goodness, it's going to wipe you out if you don't play defensively as well. So it's a double-edged sword, in my opinion.
Yeah, I know you're right. It's never easy. And, I'm someone who never really uses leverage anyway. I don't feel that you need to. And I think that nowadays with the addition of the micros, I think that's such a great product for new traders and even advanced traders. I actually opened up a micro account last month. I've been using it a lot. I mean, like you said, if I have some of these really wide ranges of areas where I want to execute in, I just go to the micros because I could split my prices up a lot easier. You don't feel as price sensitive as you do with the regular E-Minis. Are you guys using micros at all?
Yeah, I made that same adjustment myself within the last couple of months. I just felt it made a whole lot of sense, and that way you could still participate and without getting run over. And if they have one of these, bursts, a 50-point burst in 30 seconds or whatever, you're not out of the game. You get banged up, but at least you're still in the game. You can't afford to make the big leverage trades right now unless you're doing it with options, and then okay, you can take some heat, but you're not going to let this thing run against you, that's for sure.
I think the micros are fantastic because it basically what Anthony was saying is it allows you to layer in, but it allows you also to step in because once again, just like Paul was saying, these moves sometimes are so big. So you may start out the day with a scenario and you're saying, hey, if it makes it up to this level, I'm going to step in. Well, you can use the micros and actually you can use them. Let's say that instead of you can basically split your position in the sense that, okay, instead of I'll take a 40% here, and then if it goes beyond that, I can, add on another 40% or whatever. I'm saying is it allows you to layer in from a percentage standpoint. And actually, like I said, one of the things I love about the SPOOs is the back and forth, and I made a reference to crude oil. One of the things I haven't traded crude oil when they announced they were going to not, Russia wasn't going to come through. I took a fast short. But other than that, I don't. And one of the things I don't like about crude oil is quite often you do get run over and the market will keep going. A lot of people talk about FOMO, and that's one market where it works in. The one thing I like about the SPOOs is you get that back and forth. So if you came into a position, you use the micros to position, like I said, percentage of the market goes to that next level, the market will usually rotate back and you have an opportunity, if you're wrong, to either get out. And actually, if it went to that other level, you may be able to get a short from that area. It comes back. You're basically able to massage or manage the position. So that's one of the things that I think has been fantastic about the micros.
Yeah, let's talk about everybody's process right now. We'll go back to you, E, age before beauty, of course. And
why can't I?
And you are so good at explaining process, E. I mean, it's something I've admired from you for years, is that you really do have such a solid, consistent process in the way that you approach the markets every single day. Talk to us about how you are approaching these markets right now.
First of all, thank you so much. I appreciate that, and coming from you, and I know the level of sophistication you're at, so that means a lot to me, and I appreciate it. Let me start by saying that I'm a teacher at heart. I mean, that was where I started as in my background, taught myself the next phase of a business, building houses, and learned that was a process and it was a sequential thing, that one thing had to happen before another. You need the foundation, then you need the infrastructure, and on until you get to the final finishing touches, the interior touches. And trading is probably the same way. I look at it the same way. You need that foundation. And so my process is consistent, whether it's a 1-minute chart, intraday, or whether it's a 4-year chart. I'm going to look at it the same way. I've got, some people love the Fibonacci. I do too, but I do it a little bit differently. But putting my indicator together, I've set it up so I can set that any way I want. And for me, the approach is I look at Paulie's stuff. He's talking about 0.78 and whatever. For me, that process is going to be so similar, but maybe the degree or two difference is what I change from what he's doing. So the process starts with looking not just at the big picture. I want to see OTF. I want to see where these guys are probably going to come in. And so the first process is, where can we go today? Where does the predictive suggest that the next 2 to 3 boxes, where are they? And I identify in the morning, go through every one of my charts. But I'm focused just on the E-Mini. I'm not looking at oil. I'm not looking at NASDAQ because I know those interrelationships may be true, but it's more important to know exactly what are if I'm right, where is it going? And if I'm wrong, where do I know I'm wrong? Where is that violation that says, okay, we're going the other way? And that's the time when you can say, if you're in a trade, all right, you got me. I'm not going to fight you. You want to go north like they did at the end of the day on Friday. And so you adjust and say, okay, let me get part of it. Part of it is still better than none of it. And my wife was the one who shared that with me many years ago, that if $200 was lying on the ground and 100 blew away, would you go down to the ground and pick up the other 100? And that's the way I like hit and run trading. So that's my process. Where are we now? First thing in the morning, look at the charts, go have my coffee, sit and talk with my wife, come back, talk with Zeke a bit. What are you thinking? Where are we going? What's in play? Yeah, what day of the week, what day of the month, all of that. You process it all, and then you say, who's trapped? Who's going to get squeezed? What did they do overnight? And the next thing you're looking at is a game plan. Okay, this is what I think. Let's see if we can confirm that. I'd rather miss the first part of the move, but have a less risk on a trade, and you don't have to start the day off in the hole. So I'm one of those conservative traders. I don't feel I need to be in the market. I'd rather be in the market when it's running and moving rather than when it's chopping in a 3 or 4 point range. So that's part of my process, just getting ready for the day and then making the adjustments as the market gives us new clues.
Yeah, I'm going to get to you in a second, Paulie, and get some comments on everything that E had said. But a couple of things, E. You said OTF. Some people may not know what that is. Could you explain to everybody what OTF is?
Sure, that's as Fari would call it. My friend Fari, he'd call it the generals. The people who move the market, the big traders. And you can almost see them coming in. And the trick is when you start to see something like an angel. If an angel forms, which is simply a bar that's a positive bar and the low doesn't get violated, and that's set. Once that's set, and I use a 3-minute bar now. I used to use 5s, but I use a 3. Then you're looking for it perhaps to do a bounce, and how high will it bounce? You don't know, but you can see the footprint of the generals now starting to push the other way. And as Paulie already said, the SPOOs love to rotate. They're very rhythmical. And I think they're the perfect trading vehicle. And it doesn't matter what size, whether you're, a big boy with a, big contracts or the micros, they're all going to be the same. So you use the level that's appropriate for your count size, and the OTF are going to move it. It's not going to be me. It's not going to be you. It's not going to be Paulie. It's going to be these big movers and shakers. And when they go into a position, you can see it, and you can feel that you're fighting the rhythm right then.
So a couple other things I took from what you were talking about with your process is, one, how you're easing your way into your day. I do the same thing. I think that you set that tone early. You roll out of bed and think you're just going to come in and trade. It doesn't work that way. I know that Paulie gets up for sure earlier than you and I. He's probably one of the earliest risers I know, and he's well prepared from the night before. We all are, and getting up early and ease our way into the day. And something else that you said that I talk about a lot on Twitter, and I think is extremely important. You're not in a hurry to get into market. You'd rather see a move almost what I would call underway than be jumping in and trying to fight a trend. So like if you have a level, you're not just jumping in right at that level. You're waiting to see some response, and then you're getting in.
Correct. Absolutely. Get some momentum going. And once traders are being steamrolled, you're just joining the winning team and saying, okay, that's let me take part of it. I mean, how much do you need? That's the question. Why are you in the business? If you're in the business to earn a living, you got to make enough to make it worth your while. But truth be told, with some of these moves, you just need to get pieces, and that's what I love to do, is hit and run. There are times, and people should not take take the idea that we're always into the market. There are times you can't be. You go to the bathroom, a neighbor rings the doorbell, needs help starting their car or whatever. So that's why I love the hit and run approach, where I can come in anytime and within 30 seconds size it up and say, okay, I think this is our next range that we're going to trade, and if I'm wrong, I'm wrong. So it allows us to participate more often in selecting the time frame that we want to trade and selecting the price range that we think gives us the best odds to make something before we get stopped out. That's the key. Who wants to see a great move get stopped out by 2 or 3 points and say, all right, let me go get a glass of water, come back, and it's now gone 25 points in the direction you had picked. So, that's part of the game. You're going to make mistakes. And like when you and I go play golf, if I hit the ball in the woods, first thing I want to do is get it back out and put it in play. You take your penalty stroke, you don't fight it. And same with trading. You got to just accept it and say, okay, so I lost a couple of points. What's next?
Yeah, no, I totally agree. And I've been in the trees a little bit lately, so I know what it's like to punch out. But Paulie, I want to go back to you. Paulie, like I said, I've known you for years. Your work ethic is unbelievable. You are somebody who is you put out a lot of content. You have such a positive attitude towards trading too, which I really like. Talk to us about how your approach has been lately trading these markets.
Well, it's interesting to hear Hans talk. It reminds me of, because my approach is different in a sense, although him and I and you, we kind of, people see my quotes, we're back and forth in as far as certain levels of, or that we're looking at the day, but reminds me of what Pipsar Blake Morrow says, many ways to skin a cat. And so my approach is different. And I'm a scalper. I mean, I couldn't swing trade to save my freaking life. You know what I mean? And I don't think these markets are necessarily set up for that. And I'm not even, and same thing as a day trader, although I will come in and I'll trade multiple times throughout the day. But my forte really is more from a scalping standpoint. So getting back to that is the way that I approach it is, and I'm going to talk as these markets have also changed. When I was, because I primarily started out, excuse me, as a Forex trader. So, of course, I'd get up very, very early because the European time frame, big time to trade currencies, and as we rotate into the U.S. session. And there was hardly nobody around. I mean, like 2010, 11, 12, 13, basically nobody around from the U.S. session. Now things have really flipped. You will see a ton of well-known U.S. traders in the European session. Already like guys that you would never even think. I mean, like with what's his name, Joe, the stalwart Joe Wiesenthal. He would come in around 4 a.m. Eastern and say, what happened or whatever. He was like the first guy in the day that would come in from the U.S. session. Now it's like, you've already got a ton of people in there. And the reason I was mentioning that is because now what I see lots of times is, but I don't get up that early, but sometimes I regret that, which is you will see a key high or a key low in the S&Ps at around either 2 a.m. Eastern or 3 a.m. Eastern. And I'll come in like I'll wake up before I do a webinar. I'm like, oh God. I go, man, it's already 15 handles already off of its lows. Hit a key level. But the way that I approach it is I try and come up with a theme as I'm coming into the day. And I'll give one case example to what and I like to share a lot of information on Twitter, basically kind of help people out a lot. And then I share, like I said, between the three of us. So day before yesterday, we were coming in and this is when they had the Gilead story. We fell I think it was before actually the Gilead story, I believe. But anyway, we'd already fallen quite a bit in the SPUs in the European session. I think they got down to 2750s or something. They were coming back up, I believe, if the days all run into each other. But the key thing is the NASDAQ was pressing up against some levels. And I said, hey, look, I was telling some people in the, for example, the chat room, I said, hey, look, I think we can go in and press much higher. They were thinking maybe we'll run out of gas. I'm like, no, I think we're actually going to be able to press higher in the NAS. That potential is going to get the SPUs up to about 28 in the teens, like 15, 18. And potentially we may even stretch up to 28, 29. Actually, it was the day of the Gilead story because before that story. But anyway, the key. So I was actually looking as the market was coming back and it was defending. And I look at, instead of 4-hour charts, I look at 2-hour charts as my longer time frame. So I saw the market defending those lower areas coming back up. And as y'all both know, the SPUs really love to punish traders. So I said, hey, watch out. This thing may really start to go in and take off as we come into the open. And essentially, that's what had happened. The difference was is the Nasdaq started to edge a little bit lower. The Bank of Japan came out and said, hey, they're going to have unlimited bond buying. That sent the catalyst, and we took off, and eventually we got up to, I think it was like 28.37 before we came down. And then, of course, that Gilead story broke and all heck broke loose. But what I like to do is, from my approach, and kind of gave like a more macro look and an example, but I'll come into the day and I'll look at unlike I will actually look at the NAS and the SPOOs. And as Anthony knows, is I've even made that joke before on Twitter, is that the SPOOs follow the NASDAQ like a lovesick teenager. You can actually see the NASDAQ hitting certain levels, and as it starts to run out of gas, you'll see the SPOOs come in, and kind of like what he was saying, hey, would you like to go and pick up some real quick money? And so I look at the divergences there, and to fine tune it a little bit more is I use a program called Bookmap. And not to trying to push something, but one of the things that's helped me do is I use what they call the volume bubbles. So I can see the bid and the ask, and what I'll use it to go to certain levels. Those might be key levels on the 2-hour or 30-minute chart. And then what I'll look for is if I see the volume bubble really getting real fat, like I tell people, hey, there's a lot of volume coming in here, and it coordinates with a Fibonacci, then we may see the market either going to rotate lower, or we can really start to take off. And that's what I was mentioning the other day when I was saying, hey, look, I think this market is going to go and take off right from the get-go on the open. And everybody that was short in the European session, they were all going to get run over. So you knew you had the momentum there to really stop out a bunch of people, and eventually we ended up getting to that 28.29, but it actually got all the way up to 28.36. So that's the way I approach it. I actually look for divergences use the VWAP, which the market will come down, it'll find support or resistance depending on where the VWAP is, and then I use the closing bodies. A lot of people put the resistance at a high and a low. I always tell people how many people actually sold the high, how many people bought the low. So I actually go with the body touches on the closes, whether it's going to be a 5-minute chart or either a 2-hour, and they can set up, key moves going forward. And so during the day, I'm just letting the market go back and forth against these levels. And then I use those volume little bubbles. Basically, when I see them expand real fast into a key area, I say, okay, that's it. And because I'm scalping, if it does rotate lower, I'm not trying to call a top or anything. I'm just trying to catch, like Parmelee said, just trying to catch some good quick money. And then if we see some more follow through on a 5-minute or 30-minute, then I know we've got some momentum, and I will go with it. I mean, I hope that kind of explains it, or if it's not too convoluted. But that's essentially my approach, is just using. I look for divergences. Using that tool where I'll see that the market is making a new high, but I think of the term that's at the bottom of the chart looks like an RSI, which I don't even use oscillators. But when I start seeing that diverging lower, but the prices are going higher in this program, then that gives me a tip. I'm telling people, hey, look, I think we're running out of gas. We're coming into a key fib. The volume bubbles start, bursting real fast, and then quickly you see the market go. But I don't trade the NAS, but I use that as either a complementary indicator, so to speak, or an indicator to give me an idea, can these SPOOs push much higher? Now, lately, that relationship keeps going back and forth, where sometimes the SPOOs don't pay attention to the NASDAQ, and it keeps holding the bid even though the NASDAQ is fading, and you can use that to your own advantage. But once again, I'm scalping throughout the day. I'm not trying to swing trade it. I'm not one of those hold the end of the day traders. If I did, I'd be losing like crazy, because that's not my style. That's not my forte. I'm a scalper. That's all I can do. And as I mentioned, the reference for the crude and Parm was saying is that market will just go and go and go. So you're not able to say, oh, coming in at this level and that level. It'll just go, and it'll just, as we saw the other day, it will just run you over. And the thing I like about the SPOOs is the rotations we get. And once again, I think that was a fantastic idea where they came up with the micros, because you can really manage your position very, very well, whether you're long or short. But I'm saying is, even when you're wrong, one thing about the SPOOs, they love to come back to levels and rotate. And the market with the SPOOs, they never forget those levels. I don't know what it is with this market. Other markets will come back to other levels, but not the way the SPOOs have. So I mean, I hope that kind of explains it.
Good stuff.
Yeah.
Good stuff. How about you, Anthony? Let me ask you, what adjustments have you made other than just going to, perhaps a little bit smaller size? What do you see with the markets right now compared to, say, when you were even 5 years ago? If someone were new today trying to get something out of this conversation, what's the kind of advice you would give them, the things that you're finding that are working and would help them?
Hey everybody, a quick pause here to talk about FTSE Russell. They are a leading global provider of benchmarks, analytics, and data solutions. The Russell 2000 Index is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 Index Futures Contract, symbol RTY. For more information on FTSE Russell and their products, please visit FTSERussell.com. For me, it just really comes down to I'm hyper-focused now. I only have 2 charts up. And like what Paulie had said, he and I have had many discussions about looking at divergences and things like that and having a theme coming into the day. The one thing that when it gets really busy like it is right now, and I go back in my career, the times where I've had such really good success, in 07 and 08 and 2001, 2000, it was that I really just understood the theme of what's happening, right? We all know that COVID right now is what's impacting the market. We all understand that. So I don't overwhelm myself with too much news and too many things. So it's just understanding the situation is going to be volatile. So I don't consume too much macro data points and all these different things. And I see everybody trying to figure out the why. I think less about that now because I know that that's going to take a lot of time before people can really figure out what really is going on. So that's one thing. And then I take it down to the point on my charts to where I just really pick 2 charts. And right now for me, it's my 60-minute, and I've actually been using 1,000 tick chart lately. So a lot of times that'll be a 5-minute chart. It'll depend. I do some homework at night, and I'll look to see how they're working on my levels, and then I'll stick with that chart consistently. Of course, I'll look at the daily, and I'll look at some other things, but what I look for specifically during these times is emotional highs and lows on the bigger picture, and those levels become extremely important to me. I actually did a video on this on my YouTube channel not too long ago where I talked about how at the end of February, we made that low, and then we rallied up, and then we made a high. And at that point in time, I remember looking at the daily and saying, I think it was like 28.42 on the continuation chart, and then 31.18 was the high. I said, that's a pretty good low. So what I did was, what I do during these times is say, technicals on the bigger picture they matter, but to me, it's not more about the technical analysis. It's more about when we make a high or a low that everyone looks back at and says, that's a really decent high, that's a decent low. So those become important points for me that I then look at on my research. So for me, take it to where we are right now. I have 28.24 to 28.30 on my 60-minute chart keep coming up, and I go back to that old low of 28.42 in the S&P, and I keep saying to myself, this is a big pivotal area. It was where that I felt was an emotional low, and I felt that a lot of people thought when that low was taken out, it was significant, and we went a lot further. So intraday, I am waiting for triggers on my 1,000-tick chart on rallies to sell against it because I think this area is big if it starts to cross over and so on and so forth. So what I do is, essentially, I'm keeping it super simple. I am not looking at a bunch of different charts. I am not looking at a bunch of divergences. I am not really reading too much about all of the macro points that are happening because I know that they all matter right now, and there's too much for me to digest, so I keep it really simple.
Interesting. Couldn't agree more. And that's the point of being a day trader. There's always opportunity, and we want to know where the macro points are just as our frame of reference. But as a day trader, we know that there are going to be ranges that it's going to swing intraday, and then where does it go at the end of the day? Who has won the daily battle, the intraday battle, and then how does that stack up against the previous days and previous weeks and whatever. So for me, that OTF level is important to say, okay, this is probably the range that we're going to be in, and that's already that's already in stone. You already know that. So you say, okay, maybe it's an inside week or maybe it's an inside day, and at least gives you a starting point. And then if you get fooled and it runs outside, you say, okay, maybe it's going to run a bit higher, and we're going to run some stops before they come back. So I like your approach of simplicity. And that's the hardest thing is you can look at, and I put them on different charts, and I must look at 25 different charts, all on E-Mini, just feeding my mind. And then the trick is to let it go and just relax and use your intuition, which I think most traders don't get. They think it's got to be overanalyzed to death. You look at a guy like Derek Jeter out on the field, my God, the guy would just react and make the play. That's the way we need to be as traders. Be like Michael Jordan, where you just get the ball and you make it happen. And I think we need to do that. You do your analysis, you do your study, and then when the market comes out swinging with a 25-point gap on Sunday night, okay, now we know. And we're either going to run a few more stops or we're going to back in fill. So, the over analysis part will drive me crazy. And that was probably the hardest thing for me to overcome was just understanding, you know what, you're never going to know. There's always going to be 50-50 odds for it to go 2 points one way or 2 points the other way from wherever you are. So, you've got to learn the discipline to say, okay, you got me and let me try again.
Yeah, I think it comes down to, for me, is as simple as if this area holds on my bigger picture stuff, I know that the bigger picture trend should help me with my shorter term, right? So until I start to see the market push above 2842 in the S&P, I feel like the bears can take us back down. And then I just use my 60-minute levels to say, okay, where are my support? I had 27.75 the other day. I talked about that and it coincided with a trend line. And I had a swing short position on. When I got there, I said, you know what? I have to cover some here. And I wanted to see the reaction below it. And then you trail it to your next level. And I'm not fighting I'm not fighting them intraday when I see a big picture area hold. So I think that's also something. And if I am, it's small, and I have to have multiple confirmations if I'm going against what I saw happen on the bigger picture, because I do still trade both sides of the market intraday, and I am doing some swing positions, but only when they're near really important daily levels for me. And that doesn't happen so often, but I am doing them when they get there because I feel like that's a time where I'm going to trade small and I'm going to try and hold this position. And I actually want to go back to Paulie about scalping intraday, because I think that a lot of people out there, when they're trading futures, they want to be scalpers, and they try to figure out how to do this. And Paulie, you explained your process for your thinking, like how you are thinking. Now talk to us about how you're scalping it, how you're literally scalping it in the directions that you are. How are you managing a stop? How are you putting in targets? How many points are you determining to get in and out for a scalp?
Well, one of the things that, the problem was mentioned about the simplicity, basically, despite me saying, the divergence here, and there, that's essentially what I'm doing, because I look at the theme for the day, and a good example was crude. As crude was coming off of these lows, and I don't trade crude. I mean, every once in a blue moon, I'll throw on something happens real fast. But the thing is that it was holding and it started pushing. And actually, I mentioned this that same time here when SPUs were pushing up against those levels, and NASDAQ was, and actually before the Bank of Japan, that was the catalyst. I said, hey, look, the crude's at the 38%. If it pushes beyond here, or I think at the time it was a little bit lower. I think it was 1674. If we get a foot all above that, watch out, the indices are going to take off. They eventually did, but obviously the Bank of Japan was the true igniter. But when I'm coming into the day, or you're saying like, well, where are you scalping? I'm just going with the levels. And really, despite what I was saying, it's all, I wouldn't say it's simple. I'm saying my approach is simple in the sense that I do have, sometimes if it's a real fast market, I'll look at the 1 minute. But primarily, I just look at the 5 minute and 30 minute, and I'll see where those, I'm looking for confluence with the 2R if we're coming into a range. So you're mentioning a big level, and I'm seeing here on the daily 2854. But really, my approach is just for that day, and actually, my overall view might only be actually a full 2 days, the day from yesterday and today, or the day forward. And so as I come into these levels, all I'm doing is I'm looking at the levels, and I let the market determine what the if you want to call it the stop or the risk is. And I'll tell you what I mean by that, which is, that's why I think the idea of including or using the micros is absolutely fantastic. Because I'll give you an example. Just yesterday, we were coming in, and the market was, and I was telling you about how the market always remembers the levels. So I actually got short. I think it was like 2806 and a half or 7, and then the market pushed higher, and I said right there, posted on Twitter, I said, hey, resistance at 2812, I'm short 2811 and a half, and I put an ad. It was an ad. So the market rotated back. I mean, because I said that 2812 was key, and that's what it went to, and the market rotated back, and I think I covered it like that ad at 7, and then the market dipped even lower, and the initial was like 5. But I let the market, the levels in the market, I'm looking at the 5 minute chart on those levels, and I'm looking at the 30 minute. I let the market tell me what those levels are, and by using or including micros, depending on the time of the day, because you don't want to get run over, is I'll manage that using the micros also if to the position size that I want to put on a risk. It allows me to stay in the trade longer, but I come in with a theme thinking, okay, I think the market's going to push up a little bit higher. I think we can fade back. Where are some good levels to go in and come in? And it's the market, not my own. I mean, ultimately, we have to measure our own risk, but that's the advantage of using the micros, is because if you say, wow, this thing may even go another, and lots of times I'll put in, this is a resistance and this is a stretch. So I might say the resistance is 12 and the stretch is, let's say, 18. Okay, well then, instead of me coming on with the full size or half size, I may use the micros to position and say, okay, like what Parm was saying, would you pick up $100 if the other $100 flew off? Okay, so I'll come in with the small size at 28.12. Okay, if the market rotates lower and I'm like, wow, I should have hung on, I should have done a full position, but better to pick up a little than none. And then I'll say, okay, if it makes it up to the stretch, I can come in. And one of the things I do that I think it helps me and I think is key for traders is I visualize. And visualize in the sense is not only what the market will do, but visualize that I'm in that position. So I'm like, okay, if it gets to 28.12, okay, the stretch is going to be 28.18. And I'm already preparing myself. So instead of kind of freaking out, it's 28.13, 28.14, 28.15, maybe it's kind of fast. I already know where I'm going to come in the next part. So my head's already figuring out, wow, okay, it did push up against me. So I'm not kind of freaking out thinking this thing is going to the moon. I bail out of my shorts at 28.17, market tops out at 20.18 and rotates lower. And then I'm kicking myself saying, oh my God, what an idiot, you covered. I'm already visualizing what the market could do. Doesn't mean I'm right. But if it goes against me, I already have, at least in my thoughts in my head. So I'm thinking, okay, well, this is where it may go to. This will rotate. But ultimately, getting back to your question, I use the levels, and the levels are going to determine to me where the stops are. And I think that's where sometimes a lot of people get chewed up, and why you should use the micros, because if you are going to be wrong, or you're thinking, I think this is a good level, but I'm not sure, I'm not 100%, okay, then use the micros and use that to manage your position, because you can come into a percentage of what your position would be. So once again, my approach is simple, but I let the market do that. But once again, unlike Parmelee says, I'll let the thing run or whatever, that's not my forte. I can't trade that way. I'm only a scalper. So my moves are a lot tighter, and then I may not make as much. I may have to jump in and out, and I may lose a decent part of the move if the market keeps going. I'm like, oh wow, I really screwed up getting out too early. That happened to me on the story of the Gilead. I got long. I got short when we got that next rally back up. And I ended up jumping out like I think it was like 28.06 or 28.05. I felt real good. And then the market, before you know it, it's like at 27.94. And I'm like, oh my God, what an idiot. And I even put that on Twitter. I'm like, oh my God, holy smokes, or holy moly guacamole. Look at this thing. It's still going, and look at all the money I left on the table. But that's not my game. I don't ride positions. So I hope that helps. I try to share a lot on Twitter. So, but at least I think, like I said, people may understand that I'm really a scalper. I'm not a outright full day trader or swing or intraday swing trader. It's not my game. So I just stick to what I can do within my constraints of my, just trying to think, strengths. I can't divvy from that, because if I do, that's when I end up just giving back.
A question I constantly get is, what platform do I use to trade futures? Well, I use TT. They are the world's fastest commercially available futures trading platform. Now they have integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. You could try it now for free at tryttnow.com. Yeah, well, it's exactly what you just said. I think that a majority of the traders that struggle with scalping is because they find themselves over trading the middle way too much. You rely so much on your preparation that when they get to your areas, you're already prepared to trade those areas. So you're more efficient at it. I know that the mistakes I've always made as a scalper, and I've been a scalper for many, many, many years, not so much these days, but for me, the mistakes I would make would be over trading the middle. That's where I would get caught. Okay, they hit that area, they came off, I didn't get in.
Everybody gets caught there. The middle is the hardest place. The rotation's in the middle.
Yep. And, so I think that if you're going back to what you had said, Paulie, you stick to who you are. And if you prepare properly and when you come into the day, you're mentally prepared for what it is that you have to do, and you don't get off of your plan. And actually, I want to talk about the last thing before I let you guys go, is just dealing with drawdowns and actually getting off of your plan in moments. Because I could tell you, for me, I had 4 days last week where I was in my biggest drawdown for the year. Not this past week, but the week prior. And it really was, I came in, I had a good Monday. After that, just really caught myself like out of rhythm, out of sync, where all of a sudden I was not executing well. I just wasn't. It was funny because I was not funny, but it was funny in a way that I saw what was happening, but yet I kind of was just in this funk and I couldn't get out of it. And I actually have talked about this, is that I felt that a big part of being on lockdown for me, and trading every day, is that you start to get fatigued. And I am somebody who's exercising every day. E and I actually live near each other, so he'll see me walking my dog or running, and I'm always doing something all the time. And I work extremely hard at preventing that, but yet it still sometimes happens, because let's face it, we're watching this stuff 24 hours a day. Maybe not that much, but you know what I mean. And I caught myself into where I was just letting the market take for me. I wasn't taking from the market. And of course I had some bad looks as well. You throw that into the mix, you get into a drawdown. And I had to take 1 day off, which I think is difficult to do in an environment where you're home all day and you're watching it, but I needed it for a mental break. I took a 1 day off this week as well, where I just said, I'm not looking at it. What are you guys doing during drawdowns? And how are you dealing with the stress of just looking at this all day, every day? How are you creating that balance? We'll start with you, E, first.
I think that's a great question, and I think everyone will answer it differently. My mindset is, first of all, I need a certain amount to just bring in a little income at my age. It's different from the guy that's trying to support kids. He knows he's got college coming, all that. So what are we trading for is the first and most important part of it. And for me, at my age, with needs that are very simple, I try not to overtrade. I try not to make any one day or any one trade that important. I know that I'm going to swing the bat. I know that I'm going to hit some. I know I'm going to miss some. If I'm in a funk where you get a few bad trades in a row, you stop trading. You never want to get taken out of the game just because you revenge trade. So that's the hardest part, because we're in lockdown, and even if we weren't, those of us who love the business, we're passionate about it, and this is our hobby. This is our golf. This is how we do that. So, you have to shake it off. You have to make sure that you have rules, that your account size matters, and that the more you take out of it instead of putting in and accumulating, the harder it becomes to bounce back because you just go in that downward spiral. So it's like your diet, you start to lose a couple pounds and then a couple more come off. And so you need to break that negative thinking where all of a sudden you lose your confidence. And I think that's the hardest part. So you need to be especially vigilant for the things that are going to undermine you. For me, the time zone that I don't like to trade. I tell you every day, time for a swim. Why? Because I know, like Anthony says, first of all, I'm tired. My eyes, I get eye fatigue, just sitting there, just watching the market, making decisions. By the end of the day, I don't have the same enthusiasm for the trading because I know my odds are going to go down rapidly, unless it's time for a late contra, where it's run all day long, it's been squeezing, and so then maybe I'll come back. If I've had a really good day, I'll just go to the pool early and I'll come back and watch the last 10, 15 minutes when there could be profit taking again. So avoiding the situations, I think, is the key. When we know ourselves, nobody has to tell us about ourselves and our trading. We need to be our own best coach. And my wife is very helpful that way, where she will say, well, you know what? Come on, you'll get them tomorrow. That's part of the game, is having somebody that you never hide things from. I account to my wife every day. That was part of my rules, that I will not hide things. I had traders come to me and tell me they lost 150 grand trading options and they hadn't told their wife. That was sobering. And I said to myself, I will never do that. I want my wife to know that I value our relationship enough. And I've done that before, thrown a lot of money away, tons of money away in the real estate business, if I had only listened to her. So I know my own weakness. I'm a gambler at heart. I'm a risk taker. And for me, that's part of it, is immediately going into that, okay, just shut down the operation, just like you did. You take some time off, and then you'll come back with smaller ideas and get back into it. And I'm not one of those to press anyways. I'm much more conservative at my age. But you know what? We're all going to make mistakes, and that's okay. You're never going to get everything right. And as long as you can keep from killing your account, you set that rule. So much, I have it right here on my computer screen. I'm looking at it now. I cut my losses, maximum, blah, blah, blah. That's it. Again, once that happens, I'm out of the game and I'll watch, but I won't trade again. So that's how I'm dealing with it.
Paulie?
Took a lot of key things from him on that. And one of the things I think is important is loss of confidence. And for some traders, they may or may not have someone that's significant in their life that they can go on and confide with or something. I think the key thing is we have to be honest with ourselves, and also the loss of confidence. That's what key things I was taking from him. And I'll give you an example. Is 3 weeks ago, and also you have to know when to trade or when, as he says, to take a day off. So 3 weeks ago, we came in the Sunday session and the market jumped up. I don't even remember where it was, but anyway, it jumped up. And I stepped in and shorted, and I shorted some more, and I shorted some more. Before you know it, it just kept going, okay? So I ended up staying up all night, literally. I think I actually got I think it was 45 minutes or an hour of sleep before I did my webinar at 4 a.m. Eastern. But I ended up managing the position, and by the time the U.S. opened, and by managing, I was saying is it would go much higher. I'd scalp it short, come back down, really going against everything the way that I trade. Okay. But anyway, I was managing. By the time the U.S. Open came, I was close to flat, even though the market was still much higher because I kept, just scalping it back and forth, back and forth. And then, of course, in the U.S. session, it takes another leg up. So I had a pretty good little loss, for the day. And I felt really crappy, felt stupid. I was thinking, of course, if I'd have gone back to exactly break even or a little bit higher, I guess I would have exited. But of course, I didn't do that, which once again, breaking all the rules. And so I ended up taking a pretty good loss. So I didn't trade for the rest of the day. I think the next day I may have put in a small position, and I came back, not came back all the way, but I'm saying towards the end of the week, one of the things that helped me do, which once again goes back to what he was saying about confidence, and you don't want to lose your confidence. I went into the micros, and just to, after I gave myself basically a couple of days off, to get your feet, put your feet in or get your feet wet, to start, going back to the basics, to start to see your trades of the way you're supposed to trade, see them work. And as you start to see a few things work, it's the same thing as he mentioned about, basketball, same thing, players, they're not hitting any shots. They go, just get some easy shots. If you can just, bank it off the backboard or whatever, you start to see things kind of go your way again. And essentially that's what I did, but I broke all the rules, went against exactly what I did, ended up staying up all night, managing a position, almost at break even. And of course, break even wasn't good enough. I mean, I didn't get there. I was going to have a minor loss. That wasn't good enough. So I ended up letting it run against me. But I mean, essentially, like I said, we've all been there. And that's why I wanted to go and share the story, is that, we've been in situations where we break our rules and you end up taking a pretty good loss. I think that the key thing one has to be is something what the gentleman was saying. I'm talking about the other guy was saying he can let his wife know about the losses. At the very least, you have to be honest to yourself, and you have to look at yourself and say, why did I do that? Why didn't I, look at yourself introspectively in the sense that say, why didn't I take the trade? Why didn't I exit here at the loss here? What was it kept me? And then be honest with yourself saying, hey, I need to get back to just doing the things right and not do these stupid mistakes. And I think that that's what helps, is to get back to the basics. The great thing, once again, I'll emphasize once again, the micros is, even if you're new to trading or you're not, those allow you to actually get real action, if you want to call it, and not get run over. Because so many traders, as I said, we've all been there. We've blown out our accounts, years back. And what Paul was saying, once again, you don't want to get knocked out of the game. So to me, ever since then, I've done real well as far as coming back from that loss from 3 weeks ago, which broke all my rules. But I gave myself some time off, and I, was honest with myself to say, what did you do that for? And once again, like I said, I just try and keep things, go back to the basics. And then from there, once again, use the micros at the time and start to see, the things go back your way and say, okay, now, and try and learn from those lessons. Because once again, if you don't learn from it, then it didn't do you any good. Use that because maybe it'll springboard you to much better trading going forward, because you'll always know not to make that kind of a stupid mistake. We'll still make mistakes, but once again, I think, and to me, I think I'm surprised, Anthony, because I think it reminds me of the stories of you back in the day, is I would think you'd be tearing these markets up, because lots of times I look at the NAS, I look at the SPOOs, and I'm like, these are the kind of markets that if you put on some volume, kaboom, you know what I mean? And that's what you used to do. So I'm surprised, like I said, I would think you'd own these markets. But anyway, nonetheless, getting back, I think that it's key that, like I said, that I try and keep it simple. And what I look for is a theme for the day, whether it's crude oil's moving and that's going to give the markets a boost, or maybe the markets are on the bid because of some, crazy COVID story. But I just stick to the levels. But that's what I try and do to help me when I run into this, as you said, these drawdowns. I go back to playing it very, very, very simple and give myself some time off.
Love both answers, and really going back to, for me, how I dealt with the drawdown, and actually had my best trade the week after it. And it just goes to show myself once again that self-awareness, I understood what was happening. And I don't think we all talk about, as traders, rhythm enough. And Paulie, obviously, like I said, you've known me for years. It's like these markets are typically the markets I do the best in. But sometimes even for myself, and I don't care who you are, you've been doing this a while, like I said, I just got into a funk. I got into a bad rhythm. And it was one of those things where it just carried over the next day into the next day. And I'm just like, what is going on? And when I started to, I knew it was happening. I was keeping my losses within check. I never had anything happen that was extreme, but it was just, death by 1,000 cuts, right? And I had weak hands is basically what was happening to me. Because once you get into a funk, you just can't wait to get out is essentially what was happening to me. Trimming my position, smaller in the winners, bigger in the losers. I can go on and on about this, but I think that for people, when you go through drawdowns, for me and how I worked my way through it was I really looked forward to the weekend. And it was what had happened was I sat back and I started to recognize things again. I got clarity again. What was happening? I went back to the basics. I think both of you somewhat said that. And I looked at the markets and I said, look at what you were doing. I analyzed my trades and I was just shaking my head at how stupid the mistakes I was making. And then going back to how I've dealt with this over the years is think big picture. Why are you doing this? I love when you said that, E. I mean, I remember when I first started to do this, it was like I was 21 years old and I thought to myself, I need to make money today, even though I didn't realize, 21 years later, here I am. I didn't think about that. And I feel like I'm the same person. I feel my hair still is good. It might be a little better now. It's a different conversation. But no, when you think big picture and when you could slow things down and separate yourself from that bad funk thing you're in that moment, you will find clarity again. That's something that I had to figure out at an early age is that, that's one of the hardest things to become a full-time day trader is to be able to separate yourself from when you're doing good from when you're doing bad. When you're doing bad, you have to recognize it and not give all your good back. So, or to the point to where you can't come back and do good again. And when you think big picture, short-term results start to come. But when you feel the need to produce right now, you put pressure on yourself that is unnecessary. And I know some people are saying, well, I know I need to make money today. I need to do this. I understand that. But in this business, you need to find a way to not have that pressure on yourself to have to make money every day. Because I don't care what any day trader says. Like I said, I've been doing this for 21 years. You cannot make money every day. And you're not going to make money every day. You're not going to make money every week. So once you start buying into that and understanding that, and you think big picture, you become more self-aware during these moments and you get more in control of them. And for me, that's why I needed the weekend. I needed the time away, just getting myself back into thinking clearly again, getting myself back in rhythm. So for me, that's the way I deal with drawdowns.
Well said. And for me, I've said it before, and you've seen me say this, it's easier to knock in a 2-foot putt than it is a 10-foot putt. And it's easier to knock in a 10-footer than it is to knock in a 100-footer. So part of it has to do with, your aspirations. You got to have the big goals, which I call rabbits and elephants. You need those little rabbits to, throw in the pot and to sustain yourself while you're hunting for the big game. And the big game will come. But if you're always just looking for the big game, you're not going to survive. And that's, I believe a little bit more in consistency. That's part of my mindset. I believe a little bit every day is doable. And more often than not, I will leave chips on the table because of that. But I also won't get into those big drawdowns as much either. And so for me, because I know some things about myself and my willingness to take on risk, I've learned to be much more conservative as I've gotten older. And I think that's part of the process too, Anthony, is as we evolve, we probably we have those emotional scars and we have those wounds from the past, and we try to put those in the closet and leave them there. But they still caution us. And it's helped me with real estate over the years, where I made some really bad blunders. But you know what? You come back, you learn from the experiences, and then when the market was crashing in 05, I was already out. By 08, I was out in 05, just waiting on the sidelines to come down here. That was my plan: come down here and pick up 50% off a property in Naples, and that's what we did at the time. So I look at those life experiences as fodder for my mindset, and I think as we've all touched on, without confidence, without some kind of a belief that we can do this, we're better off not trading. You're better off go find something that you're good at. And let's face it, the odds are against anybody really winning at this game. So, why try to be the superstar and say, I'm going to make $1 million my first year with a $5,000 account? It's not going to happen. Be realistic.
Yeah, we got a couple minutes left, and I want to go back to you, Paulie. We'll do a minute for you and E. This show we're recording on a Saturday morning, but actually, thank you both for joining me on a Saturday morning. It's always fun to talk with you guys, and I'm going to put this out hopefully Saturday night so everyone could listen to it before the Sunday Open. We all do big picture homework, Paulie, give us 60 seconds of what you're seeing big picture in the S&P.
Actually, if you look at the S&Ps on a weekly chart, and I look at the different time frames, but I'll look at the end of the week. If you look on it, looks like we've got two hanging mans, definitely a hanging man in this week, and we've got a hanging man in the NASDAQ. Once again, it doesn't tell me, oh, now I want to be short, but it tells me, maybe we can stretch a little bit, but I kind of think that we're kind of really, if what I'll be looking for is, for the next few days out, is the market starting to tire and potentially rotate lower. But that, once again, I want to go and say that is that one of the things is that I like to go with where the market is taking me. I may have a premise of what may happen. I'm telling you, if you look at the NASDAQ weekly, hanging man, look at the more pronounced S&P, it basically looks like two hanging mans, not as pronounced as the NASDAQ, but I don't marry my position. It just kind of marry my outlook. It just allows me to say, okay, let's see if it does that. So if I see clouds outside, doesn't mean I'm going to say, oh, it's definitely going to rain, but I may just go and take the umbrella out just in case. And so that's going to be my outlook. A lot of people were short. A lot of people, I think, got run over. You know how those indices are. Once they run you over, then we can rotate. So maybe we'll see if they can push a little bit higher. And then from there, I think there's a susceptibility for us to go lower.
I look at the market two different ways. The first way I look at is what is the underlying market structure, and by that I mean there in my mind there is a football field where there's an end zone on both sides, and the ranges are in between. So that's already there. We already know that before we even enter into any trades. So for me, the big marker right now is 28.12.5. As long as we're above that, we're going long. Below that, we're going back down, looking the other way. There's the chains on the field. There's an overlay, and that's where the price action happens on top of that grid. And so for me, 27.85.75 is this year's middle, according to my stats. And as long as we're above that, which we held on Friday, we're going long side, trying to test the upside. The last year's middle is 28.46.25, which is right near your 28.42 zone. So that's an area that I need to watch to help guide me in between that range. Long term, I think we've got ourselves back into last year's range, so we're still going to be range trading. I don't know that we're going to immediately go back down to test the lows. Don't know we're going to come flying out the top. Don't see how that's possible. So I think we're going to be stuck in a range, and for now, probably let's say 2,700 to 2,900 needs to be resolved before anything else, and trade that range until we get some outliers.
Hey everybody, I want to take a quick pause and talk about RJO Futures. They are a long-standing brokerage firm with personal broker relationships to learn, discuss, and trade the futures markets. To learn more about RJO Futures, please visit rjofutures.com. Yeah, we forget what it's like to spend a little time in an area, don't we? Right?
Absolutely.
I mean, everyone's always looking for highs or lows to be made all the time. We forget that we may start to spend some time in an area. So that's something that I have noticed towards the end of last week. And I really have a range boxed out right now from 28.05, which is a daily level for me, to 28.42. That to me is the area where I look at that range and go, I think it's going to be very choppy in there. I think we've seen this past week. Daily closes above that area, I feel like the upside potential is there. I'm going to be very wary of being short. But now daily closes for me back below, we'll say 28.05. I think that 25.92 is an area that could trade this week. I might even do another swing trade potentially if I see a daily close below 28.05. I won't do a long up top, and I know some people will say, well, why not do a long if we close maybe above the 28.42? It's because there's so many things, obstacles I see up there when I look at the daily that I don't know how clean of a trade that will be. So that's the reason why I don't. I think it will be choppy and potentially a grind. I think if we close below 28.5, 805, I think 25.92 could come relatively quickly. And yeah, so I mean, look, we all do our big picture planning. Us three, we all know because we talk about it all the time. It all comes down to execution, and you guys have just done a great job today sharing with us your process for everything from preparation to execution. So thank you both so much for joining me and just for being such good, positive guys out there on FinTwit. I know it can get a bad name, but you two guys are two guys that really give us a great name. So I thank you both for what you do.
Thank you, Anthony, and thanks for the opportunity to share our ideas.
Yeah, and thanks. I mean, and that's it, basically sharing the ideas, and I think that helps. And that one of the reasons why I like to share between the three of us. Although I'll try and share everything I can on Twitter to kind of give people a little bit of an insight. But to me, it's the sharing of information that really makes a difference, because you kind of get it. Oh, even if you're not trading up that specific market, it gives you a good outlook. The only thing I will touch on, if I can, is there's actually a big event this next week. It's free. It's called the Traders Summit, and it's actually going to have Mark Chandler, Peter Schiff for all you big gold traders, and Adam Button, and of course Blake Morrow, and this bunch of others. But the good thing is they're going to give their insight. It's an online event. It's free. It starts April 29th and it's the 30th. Trader Summit through Forex Analytics. It's free. But at least you can get some insight what these other traders are looking at from their own bigger or medium-term pictures. And once again, those are the things that help me. So listen to Parm, listen to you and the approaches, and then once again us also talking about drawdowns. How do we handle those things? All those things really help, because other traders can identify and say, wow, I've been through that. Oh my goodness, I made that stupid mistake. And seeing how best to go and help each other by sharing that information, it kind of, provides a good positive feedback and support for all of us who are out here, because it is a tough game.
Yeah, no doubt. Paulie, where can everybody find you on Twitter, and give us a website to check out?
Yeah, it's going to be at SPZ_trader. So just like the spoos, at SPZ_trader. And then I'm with Forex Analytics, FOREXANALYTIX. And we cover at that. It's a pretty good, not to go and push, but it's a really good site, because a couple of the guys, along with Blake Morrow, they were huge bank traders, so they provide a lot of insight for not only Forex but of course booze, Bitcoin, DAX, and a lot of these other different markets. So same thing, we have a community there, and we share the information. I try and share on Twitter because I just like to go and share information, and I like the camaraderie between the three of us. So that's the reason I'm out there. I like to help people and try and share some information, but I like the camaraderie between you two guys.
Thank you so much.
Same here, Paulie. And everybody definitely follow and check out Paulie on Twitter, and check out that free event that's coming up. Where can people find you on Twitter, and give us a website to check out?
Marketwizards.com. And I've got a lot of resources available there. And the original site was E-MiniWizard.com. I've morphed over into Market Wizards now, and these would be my more current offerings. The best thing I've done really for my trading has been to automate my charts. I do a lot with spreadsheets. I still do every day, but it's time consuming, and it's so visual to use things like the widget. In a click, I put on a chart. If Paulie's talking NAS, I just go click on NAS, and it brings up chart, and I say, okay, well, I can see where the next resistance is, because it's already set in stone, and we already know where the next targets are if one area is violated, like the Darvis box system. You just know, okay, we're in the next box, so that's got to be the next target. So people want to learn more about that. Welcome you to just chat with me, hit me up through an email, and all that information's on the site. And Anthony, thanks for the opportunity to share.
Yeah, guys, thank you again so much for joining me on Futures Radio Show today. I really appreciate it.
And thanks for all the work that you do, Anthony. I mean, I couldn't do what you do between the podcast, the Futures Radio Show, and you even do. I've seen you. Of course, I've watched you all the time, but I'll see you when you do the your little video podcast from home, and basically trying to explain what all we're dealing with. So a huge shout out to you for everything you've done, helping a lot of new traders and seasoned traders actually go through this and being able to understand, or having someone else that is going through the same thing and sharing those same experiences. I think is just a huge benefit with all you do in the CME sponsored show.
Thanks, Paul. I really appreciate that, my friend. All right, guys. Thank you so much. Enjoy the rest of your Saturday. Everybody out there listening, be safe, be well. Talk to everybody later. Cheers.
Bye.
Cheers.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.